People on the internet overcomplicate the process of finding daily buys, and in this video I'm going to show you exactly how easy it actually is. I'm going to use the replay mode for example to make this as real as possible. So to find our daily buys, we have to start our analysis on the weekly chart, and we have to focus where is our most recent weekly range, and we see it's from this low to this high. So we draw our Fibonacci and we focus where the equilibrium is. It's right here. If we see weekly candles expanding to the downside right here, we're expecting price to continue moving like this. So we expect a bearish expansion. If we look at this on Sunday, we see a bearish candle which was formed this week, and I expect that coming week that we're going to continue like this, and we have to target the sell side liquidity here or an imbalance or fair value gap. So as you can see, this sell side liquidity would be our target, and it's also a low resistance liquidity round because we also have a low formed right here. So the bias for next week would be bearish, and we're going to be expecting an expansion lower. Now we can drop to our daily chart. When we have our daily chart open, we see and look for where is our most recent area of resistance. So if we see here, this is, let's say, Sunday, and this is the new opening of the week. Where's our most recent area of resistance? And we have this liquidity void. If we see a closure of candle above this would invalidate our bias because this is our most recent area of resistance. And as I said, if we see this broken, our bias would be bullish from then on. I'm thinking, okay, I am bearish until this is broken, and then my bias is switched after we break above the high of this liquidity void. But until that occurs, our bias is still bearish, and we're going into the markets every day looking for shorts. For next week, until we see this broken, again we're gonna look for this liquidity and this sell side liquidity taken, and then potentially this sell side liquidity taken as well. Now we also must look for impulsive price moves, such as here. If we have a low, for example this low, impulsively broken to the downside with, so we see this low impulsively broken to the downside with a fair value gap right here. This is not a fair value gap because it's filled, but if we see this low broken with a fair value gap along the way, we know our bias is bearish until price closes above the high of this fair value gap. So we are bearish until we close with a candle closure above this area of resistance, which will invalidate our bias and switch our bias to bullish. Then we have to also look for our bearish order blocks in this example. So a bearish order blocks are bullish candle before the bearish expansion. Every time we see a bullish order block formation like this one, we know that this candle has to be broken to the downside to confirm it is an order block. And as you can see, it is. Price respects it and moves down, respects it and moves down. So we know we are in a bearish expansion. But in this case right here, we see we got a bearish candle broken to the upside. So we see a upside expansion, and the last down close candle before it is a bullish order block or an area of down close candles. So until we see this broken, we are bullish. And then after we see this expansion, we see there's fair value gap form, and this is then our new area of resistance. And until we see a low broken, in this example going to the upside, we are still bullish. And the fact that this is the most recent area of resistance, my daily bias is going to be bullish, and I'm going to go into the markets looking for longs only. And again, this area of resistance has to be broken with a body closure on the daily chart. And this is basically quick and easy way to find daily bias. I hope you guys enjoyed the video. Make sure to join my Discord with the link below, follow me on Twitter, and subscribe to my YouTube channel. I hope you stay safe, and good luck trading.